So in this video, you'll be learning about moving averages themselves, as well as a complete moving average trading strategy.
That's right. Today, we're diving into a moving average trading strategy that could transform the way you trade. Whether you're just starting out or have been trading for a while, this strategy is something you'll definitely want to learn about. Before we get started, I want to clarify that I'm not the creator of this strategy. I'm simply breaking it down for you and sharing my personal experience with it, including what you should and shouldn't do when using this strategy. It's a strategy shared by the Trading Channel on YouTube. I've found it to be incredibly effective, and it's the strategy that made a significant difference in my trading success. This strategy is simple enough for beginners, but still powerful enough that I personally use it in my own trading today. By the end of this video, you'll understand how to use this strategy step by step. We'll go through everything you need to know so you can start using it right away. First of all, moving averages aren't some secret formula that will instantly make you profitable. Just like nothing else in trading, profitable trading relies on using multiple technical factors, like indicators and price action, to create trading scenarios that give you a statistical advantage over time. This is how any professional trader achieves positive returns. Now let's jump in by explaining what moving averages are and how we can use them to make more accurate trading decisions. Moving averages are among the simplest indicators you can plot on a chart. The three most popular moving averages are the 20-period, 50-period, and 200-period moving averages. For clarity, let's look at the 200-period moving average. The box on the screen represents 200 candles, from the most recent one to 200 candles back. The 200-period moving average is simply a line on the chart showing the average closing price of the last 200 candles. For example, on the 4-hour chart of the gold, the average price of the last 200 candles is this. The period just tells us how many candles the moving average is based on, whether it's 200 days on a daily chart or 200 minutes on a minute chart. Now let's look at the 50-period moving average. That blue line you see represents the average price of the last 50 candles. You can adjust this in the settings by changing the length to any period you want, like 20 or 50. For beginners, this means the 50-period moving average tells us the average price over the last 50 candles. So now that we know what moving averages are, how do we use them to make better trading decisions? I use moving averages for two main purposes: to identify the trend and to locate areas of value where I might want to enter a trade, either buying or selling. The 50-period moving average is what I use most often. Alone, it doesn't mean much, but when combined with other technical factors, it creates a powerful trading strategy that gives an edge over the market. Now let's get into the moving average trading strategy that uses the 50-period moving average. A trading strategy is basically a set of rules or technical factors that help you create the perfect trade scenario, which you can replicate over time to become profitable. A good trading strategy works like a checklist. You check off each rule until your entry criteria are met, then you place the trade. Trading really can be this simple. The hard part is sticking to your strategy and not switching too often, as well as managing your risk. This video focuses on the strategy itself, so let's dive into it. Here's a simple 6-rule checklist we'll use for this strategy. Rule number 1, identify the market trend. Since this is a trend continuation strategy, we'll check the 50-period moving average and ensure the price has created a new high compared to the last high, all while being above the 50-period moving average. If that happens, rule number 1 is met. Rule number 2, after identifying the trend, we need to see a pullback close to or touching the 50-period moving average. This indicates an area of value where the market might continue moving in the trend's direction. If we see the pullback to the blue 50 EMA, we can check off rule number 2. Rule number 3. This pullback must also align with a structure level that has been tested at least twice by previous price action. I mark these as areas, not specific lines, and check the past to see if this zone has been tested multiple times. If it has, we're closer to confirming a potential trade. So far, we've identified an uptrend and found an area of value. Now let's look for an entry. Before going to rule number 4, if you're finding this video helpful and want to learn more trading strategies, make sure to subscribe the channel and don't forget to turn on notifications so you don't miss any future updates. Rule number 4. We need to see buying pressure in this zone, which is signaled by a close above candle pattern. This happens when a candle closes above the previous candle's high, showing potential buying pressure. If all these rules are met, it's time to place the trade. Next, let's talk about stop losses and targets. A stop loss should always be placed below the swing low before the close above candle. This minimizes risk if sellers take control instead of buyers. For targets, I'll use a 1-to-2 reward to risk ratio. In this case, the target aligns with a previous level of structure, and the trade meets all the criteria for a bullish entry. Let's play out this trade. And as you can see, we hit our target. I actually took this trade myself. I also shared this trade with the members of my Discord and Telegram group. If you're interested in learning more advanced strategies or receiving trade alerts, check out the details in the top link of the description. Now, let's look at the bearish version of this strategy. The rules are the same, just flipped. Rule number 1, look for a downtrend where the price is making new lows below the 50 EMA. Rule number 2, wait for a pullback close to the 50 EMA. Rule number 3, ensure this retracement is near a key structure level. Rule number 4, look for selling pressure with a close below candle. Enter the trade, place your stop loss above the recent swing high, and aim for a 2-to-1 reward to risk ratio. Remember, no strategy guarantees success 100% of the time, but with proper risk management and discipline, this moving average strategy can help you make more informed trading decisions. If you want to enhance the accuracy of this strategy, I highly recommend combining it with this additional strategy. This combination can significantly improve your trading decisions by giving you more precise entry and exit points. Click on the video to learn how it works and see how it can boost your trading results.